welcome again to another week. It's going to be a short week. Hopefully, like Rosie said, focus on the Q&A. Not a lot has happened over the last week. There's no big announcements, no sort of new bits of information revealed on changes coming up. So we're just going to spend, I think, probably 10 minutes or so just recapping on a few things that I think are important, a few things we've picked up and we've spotted amongst our clients during the week. And then we'll jump into Q&A you've got live here, and we've got a few questions that have been coming in during the week that we'll deal with together, and hopefully that's useful for everyone. So let's open up this presentation. Great, so first one to rattle through. So just looking back and looking at the furlough scheme, the job retention scheme. So we know with all the data that's coming out each week, this has been a hugely successful scheme, and looking across our client portfolios and the stories and strategies that we're seeing people roll out, that it's a very important feature and probably will be an important feature for the entire duration of the scheme for most SMEs out there. So remember that the current scheme, which allows the government to pay 80% of the wages of your staff to a cap of £2.5 grand. If you furlough them. So remember, furlough is a permanent, not so permanent, it's a temporary but full exit from work for a period of time. It's not part-time, so it's not people working 2 days a week and off for 3 days a week. It is a full removal from the work environment for a temporary period of time. Okay. When the scheme was first released, it was to run until May, and we found out a few weeks ago it would now be extended towards July. Now, the first thing that we've noticed over the last week, and we've been discussing with our clients, is that if you are going to use the extended period, so if you've currently written to your employees that you are furloughing and that you've told them they will be furloughed till the end of May, you need to communicate with them again. And if your employment contracts require you to seek agreement from your employees to furlough them, you need to seek that secondary agreement to extend it to July. Okay, so just like we were saying back when this scheme was first released, is do talk to your HR advisors, any legal advisors that you've been using throughout this process, because you will need to communicate and write to your staff again to extend it. Now, the important thing that we learnt last week, or just over a week ago from Rishi, was that the scheme would be extended beyond July, but not quite as we know it. So we currently know that a scheme of some sort will exist until the end of October this year. And although we don't know a lot about the extended or the new scheme, there are two pillars that Rishi told us about. Now, the first part, is that we're going to allow part-time furloughing. So this is to encourage the steady opening of businesses again. So if you're a manufacturing business, allowing you to perhaps rotate some of your teams, doing 2 days a week each. So 2 days, so Monday and Tuesday, one team, Thursday and Friday, another team, or Friday and Saturday, another team. So the new furlough scheme will allow part-time furloughing. The second part is that unlike currently where the government are going to pay 80% of your employees' wages, that will drop to something perhaps 60%, and you as an employer will be required to top it up to 80%. Okay, so Rishi said that no employer will receive less than 80% of their wage, but the government are going to reduce their contribution. So there is going to be an increased cost to you as a business to keep people on furlough. Okay, now hopefully that should be offset by the ability to now open up your business, at least in some form again, and also to use the part-time furloughing to give you even more ability to do that. Now, Ravi, I know that we've been talking during the week, and we've been working together with clients during the week to help them put together their open up plans again. Are there any interesting insights on how people are removing people from furloughing or using the furlough strategy at the moment?
Yeah, so what we're seeing is that, and I think what we're appreciating is, as we work with a lot of our clients on this, is that actually now is a really good kind of test period. So, for example, with the furlough, if we're bringing staff off furlough, it can be for a period of 3 weeks. Then what we say is, okay, well, we're very clear on what customer demand we're delivering on in this initial period. We would then deliver that and then say, okay, well, has that demand gone away? If so, do we look at putting those staff back on furlough? Has that demand stayed the same? If so, do we continue them? Or has it actually increased? And therefore, do we start onboarding more staff members? And so the key thing is that by understanding what the client demand is, so therefore what money we can get in, therefore understanding what we can get from our suppliers to make sure we can deliver on time, we're then just planning, okay, a phased approach to starting our staff back.
So you're using phasing strategies so that we reduce the risk of opening the business again. So have 3 people working again. We think that's in response to demand. Demand was there, so the next week 3 more people working. Always the ability to put people back on furlough if demand was to fall away, or our insight about whether demand was there was wrong to start with.
Exactly that. Now the key thing is we're basing our current testing on what we know about the furlough scheme. So John, you touched on earlier what the changes might look like from August. We're not taking that into consideration yet until we know exactly what that is. We're going on what actually has been provided in terms of steer from the government.
So what we can do today.
Exactly that.
Good. Okay. Now, remember, most people I think on this call and across our portfolio that have needed help with getting your furlough application in, or to the HMRC portal and receiving your grant. I think most people have dealt with that, but just as a reminder that if we are your payroll agent, so if we run your payroll for you, we can do this on your behalf. And we distributed an email across to lots of our clients that we do that for. We've got very simple, small fee structure to helping you with that. And we've got a calculator that you can make use of to test the cost of furloughing and what the grant you'd receive back would be. There's also plenty of calculators and tools on the internet now. There's an explosion of help from various different organisations providing tools out there that you can make use of. And HMRC also have a tool on the website. So if you still need help to furlough employees, or you've furloughed employees and you're yet to make your application to HMRC, and you need help with that, get hold of one of your partners that you connect with, or client managers, and we should be able to help. Now, on a similar vein, we last week spoke about the self-employed support scheme, and one of the big things that was revealed, over the last few weeks is that agents, us, your accountant, we can't make an application on your behalf. And as agents as well, as accountants, we've been receiving emails from the government to remind us that we should not be doing these things on your behalf. And one of the sort of small anecdotes that came through is that HMRC are monitoring how the application is made, probably by IP addresses, all the rest, using some technical wizardry to find out who is making your application. And if there's multiple applications coming from the same computer or location, it is being flagged and can slow down your ability to get your self-employed support scheme grant out for you. So while we can help by giving you the information you might need, which at the moment is only your personal UTR number and NI number, there is very little that we can do to help you. But the process does appear to be very simple, as simple as signing up for some online shopping or a newsletter, but you will need some of those key bits of information: NI number and UTR number. Okay. Right, so the 2 loan schemes are the next bit important that lots of clients are still making use of. So just a reminder, so the last few weeks we had the bounce back loan scheme be launched and then just explode in popularity. Remember, this was the small £50,000 loans, or capped to 25% of turnover, with a very low interest rate, and in particular capital free and interest free for the first year. And you had the coronavirus interruption loan scheme launched right at the beginning of our crisis, which for larger loans for SMEs up to £5 million, with a slightly longer, more onerous application process, and tend to be slightly more expensive, but also interest-free for the first year. Now, Ravi, it'd be good if you can give us sort of an overview and update of what you've seen happening over the last week as you've been working with clients.
Sure. So no surprise that we're seeing over 7 times the amount of bounce back loan applications approved versus CBILS. That I think that's obviously down to the fact of how they're structured, 100% government backed. The application is less onerous. And what we are starting to see is that some of those slower banks are now starting to pay funds. So, for example, when the doors opened for this, Lloyds, one of the banks who are quite quick to turn around the application and release payment, what we are hearing from clients and what we are seeing is over the last few days, HSBC are starting to make payments on loans that were applications that were made close to the May 4th opening date. So we've currently got 69 lenders approved for CBILS and 17 for the bounce back. What's been quite intriguing, and we have been talking to clients about this, is that Starling Bank is a useful alternative, and they've interestingly announced a partnership with Funding Circle to help get more CBILS applications out. However, I think what we picked up on is that there's been a bit of bad press from Starling Bank around sole traders being rejected. Now, what that would suggest to me from a bounce back loan perspective is that they're doing more checks than I would say some of the larger high street lenders who are literally asking you to self-certify that you qualify. So I think Starling Bank, as any new lender in a new area, is starting to receive some bad feedback around the amount of sole traders that are being rejected.
Yeah, and just to point out there is that the bank shouldn't be running a credit check on you. It is a self-certified scheme, and the idea of the government pushing banks to make it, or creating the structure to make it self-certified, is that the application process will be sort of high approval rate, but also very, very quickly, sort of happen very quickly, because there doesn't have to be this credit checking process interim, and the government is picking up the tab for that by 100% guaranteeing the loans. But it's the point about Starling and Funding Circle is important, as we have seen the main high street banks getting money out, but it has been slow, both in the bounce back and very, very much on the CBILS, the larger loan lending. So it's Ravi and I have both found it very useful as we're working on loan applications for clients, is to get, if they are making an application to a main high street bank, a NatWest, HSB, etc., is to also look at a parallel application to one of the more challenger banks, or the non-bank institutions like Funding Circle.
Exactly, and you are starting to see the new joinees to the British Business Bank panel, like Close Brothers. You are starting to see them approve and pay out on applications. So I think Close Brothers had their first approval last week, and for a client that we handle, that we look after and we're working with, Close Brothers have now provided a agreement in principle with the idea that we'd be able to draw down before June. Now, what that suggests is that some of what we've been saying, some of the alternative challenger banks are working quite hard on redistributing resources internally to really make CBILS available.
Yeah, I think it's interesting because it's a good, if you look at it from the bank's perspective, it's a good opportunity for the Funding Circles, Starling Banks, etc., to actually make a mark now and to win your business, to make it clear they can be more agile, they can be quicker, and they can serve you, with the products that you need, where the big old high street banks are slow and cumbersome, and there is some truth in that, and we're seeing that happen. Good. All right. So I think that actually covers off the banking. Oh, that's right. So Ravi, this is an interesting part. So we've seen the government release a document, this big 50-60 page document around how you should be going back to work, and specific guidance across different industries. I know we've been reading that, and we've been talking to our clients about it. We've also been listening to how our clients are interpreting things in there, and what is out there on the net and in the media for what to do. So could you kind of run through these sort of 5-6 areas where we're seeing there's common themes across what clients are doing and what the government advice is?
Sure. So as you said quite rightly, we've been working our way through the various literature, governments and non-government organisations, and we're trying to pull out 5 or 6 key things that we and our clients have worked with quite closely to think about as we return to work safely. So the first thing is carry out a risk assessment. Now, I know sometimes one could think a risk assessment can be quite onerous, but actually being able to document all of this from the beginning is going to be really important. So understanding where your risks are to personal health and what how in which you operate might affect that is going to be really important. Because one of the things as part of creating this documentation is as staff members return and as we give them training, we would be asking them to sign various training documentation to say that, look, you've had the documentation based on the risk assessment we've done. We've reorganized the business based on the safety measures, and we're now safe to function in a post-coronavirus pandemic world. Mm-hmm. Obviously, there's been the key part about social distancing. So wherever possible, we've been making it clear to maintain 2-meter distancing. So if we let's talk about some actual examples. So I'll go to my two favourites. So we work with some cafe clients where they're opening for takeaway, and they're working on clearly demarking where customers should stand and when they're ordering the drinks, and how to pick it up, and a potential one-way system that allows for social distancing from a customer end, but also because they've decided, okay, we're going to start with takeaway, actually having a reduced staff load, which we talked about earlier in the presentation around your staff planning, has meant that we can naturally maintain some social distancing. When with regards to a manufacturing business or an engineering business, that's more involved around, okay, how do we reorganize the factory floor to make sure that we're maintaining distance where possible, whilst also delivering what we need to. Where social distancing isn't possible, if you've got a very small premises, if it requires 2 or 3 people to work very closely together, or they put a piece of equipment together, PPE is extremely important in the form of face masks and gloves. And what we are finding is really beneficial through this period is to pick up the frequency around how often we have our premises cleaned, whether that be a cafe, an office space, or a factory floor. One of the things which we touched on this earlier is can you offer shift patterns? So do you have the kind of business where some of your production team could work the morning shift and others can work the afternoon shift, can some work a night shift? But I think a lot of that comes down to your output planning. Once you understood really clearly what the commercials are and what you're trying to deliver and by when, it then allows you to understand very clearly, firstly, how many staff members you need. And let's say, for example, that number of staff you need is more than the amount where you can maintain social distancing. Well, then you can say, okay, well, can I look to implement shift patterns? And also you then know, okay, at a minimum each week, how much PPE do I need and how often do I need to have premises cleaned to make sure we're constantly providing a safe working environment. And the same with, as it goes through with all of this, when we talked about the furlough, communication is really, really important. So we're picking this up across all the documentation, that clear, having a clear policy to all staff and outlining not only the employer's responsibility, but also theirs, it is really important through this process, and would also form part of any training documentation that you would provide and take them through.
Yeah, I'll reiterate that the process of documenting your plan, communicating that to your employees, and also positively having them respond to that communication by signing something, being part of a meeting that they registered to attend, or what have you, is going to be really important about protecting yourself as an employer. Now, obviously, the core of what we're doing is trying to maintain and protect the health of our teams, which is at the priority of our list. But in there as an employer, you've also always got this box ticking and legal part that you've got going in the background to make sure that you're covered, you've done things in the right way. Now, without being, I think, too pessimistic or negative about the future, I can see some sort of industry evolving around a no-win, no-fee sort of piece where, you know, did your employer properly protect you during COVID-19? Did you have a signed go back to work statement or something like this? So I think it's really important to do more than you think is necessary now. And we've seen clients doing just that. We've seen clients having their staff sign documents saying that I've been provided with this, I've been given this training, I've been advised of the risks associated with going back to work, I've not been forced to work in my workplace, things like that. So just doing what you can without being too overly onerous to create a good document trail and protect yourself from possible claims in the future. And ultimately, it just creates more transparency between you and your employees, that it's very clear about the position that you're creating for them.
And I think, to just add to that, John, I think one of the things we have found is that by having a clear plan, process, and approach to this, it reassures employees. So what we're finding along all of our planning is that it's provided such reassurance to the employees that as they're coming back, and whether it's been drip fed or not, their productivity hasn't shifted, where it might have otherwise if the employees and our team members are slightly unsure as to what our policies are, how we're keeping safe.
That's good. I think that the interesting thing I also noticed now, we've been speaking to clients. Some clients have been worried about reopening because they think their customers won't like queuing a particular way, or too many customers will crowd round their entrance to their cafe, or their staff won't understand it and will be aggravated working in that sort of environment. And actually, what I'm observing, and I think probably most of us are observing, is that we've all got used to a particular pattern and way of life, and that don't underestimate your customers' patience to queue, or to queue in a particular way, for example, or don't underestimate your team's ability to know what is important and how all the social distancing work, because we've all been in it now for such a long time, and we've all been queuing at the supermarkets, etc. We all know this is part of everyday life, at least for now. So don't create the excuse of I can't open because my customers won't do this, my customers won't like it, my customers will crowd, or what have you. I think it's worth testing, because I think people have absorbed a new way of working and living.
Definitely.
Right. So Rosie, I think that probably brings to an end all the key updates we wanted to make sure we communicated. So if we move on to some Q&A, that would be great.
Yeah, excellent. Do you want to just stop sharing your screen then, John? That'd be great. So we just had one comment that came in during your presentation, John, from Greg Solomon, who was saying that HMRC are asking for claims for the May furlough to be entered by the 20th of May for payment in May. Is that correct and important for people to know?
Well, I mean, so remember that there's a turnaround time. I think it's 6 days. 6 days for furlough payments to come out. So it's HMRC reminding you that there is a delay from making your application to HMRC and receiving your money back. So you need to be making that your claim for your May payroll. So it's 6 working days, my colleagues just confirmed. So if you need to get that money in for making payments, let's say on the 31st of May, you need to be making your claim 6 days before that. Okay.
We've also got a bank holiday in there as well, which I think taking a few of us by surprise. So
course, so, yeah, May full of bank holidays, so just be careful of doing that. But remember that, and there's a lot of confusion with this when the furlough scheme open, is you can make your furlough grant claim for May, in June or July afterwards. You're not missing out on your ability to make your May claim. It's just HMRC saying, well, hey, if you need that money for your cash flow in May, so if you haven't got the working cap to make that payment and to fund it, to back fund it later, then you need to get your application in now. Okay.
Okay, and some of the other questions we had have already been covered, but there was one saying from your clients' examples, how long is it taking to receive the bounce back loans?
Ravi?
So like I said, for some of the for Lloyd's and and those types of banks have been quite quick. Actually, the turnaround has been a matter of days. However, for some of the slower banks, and I only use HSBC because that's what we've been seeing at this end. We are starting to see funds being paid out this week. So for applications made on or just after the open date, we are starting to see HSBC make payments this week. So what I've been advising clients to do is gauge it. If you apply close to the start date on the 4th and you haven't yet received some funding from your high street lender, reach out to your relationship manager. If you apply just after, I would start to expect something in the next few days.
Okay, and so some loans will be easier to approve than others. Now, we talked at great length and short length a few weeks ago around this part of the application where you've got to declare that you're not a business in distress, and we learned that lots of businesses actually technically will classify as business in distress, but that doesn't mean you won't receive the loan. So there are a few more checks that need to be made if that's the case. That might be happening as well. But do make your application. and it is going quick. It's just some are more quicker than others, and we've seen that we're you know, what's really great is our clients are letting us know when they're receiving their loans, and we're getting emails every day just saying, hey, just got my money. So
I think that, John, you know, we talked about this earlier. I think the really important thing to note is that the terms for this bounce back loan are incredible. And the fact that you don't have to pay, not only is the interest rate capped, but at a low level, which, you know, we're unlikely to see in commercial terms in normal working environment, but also no interest or capital repayments for the first year, which is frankly incredible. So in a period where you're trying to conserve cash and have a buffer, taking a bounce back loan to provide you with a bit more of a safety cushion is really important, even if you do nothing else but to hold it aside and pay it back in a year. I think having what I advise all clients to do, especially when you're going through not just a cash crisis, but an unpredictable one, is to build as much of a cushion and as much of a reserve as possible.
Yeah, I mean, it's basically a free overdraft if you look at it that way. You know, what's great is that I think a lot of SMEs are learning to deal with the now. So we've learned to use furlough, we've learned how to scale down our businesses, and some of us are learning how to crawl back out of this hibernation state. But you know, there's more to come. You know, we are in a recession or going into recession. Lots of businesses that take their orders maybe 6 months in advance, maybe a building business, a manufacturing business, a consulting business, or what have you. You know, the periods in 1-2 quarters time, as you complete your current pipeline of work and your previous pipeline of work hasn't filled up your manufacturing schedule or your consulting team's utilizable time yet, you're going to have problems again. So we've got to prepare for the long term here. So taking one of these bounce back loans, sticking it in another bank account for 1 year is going to cost you nothing. But if you do end up in 6 months' time very quickly needing to meet a wage bill when there's no furlough scheme to get through to where your client who's slow paying, you will need that cash. That will cost you a lot if you don't have that cash in the bank.
Are we saying then, John, that people should be applying for the bounce back loans, even if they're not being massively affected right now by coronavirus, to prepare for the future?
Yeah, that's it. And remember that the bounce back loan qualification criteria didn't require that you are in distress at the moment. In fact, it makes the point of that if you are a business in distress, you may not qualify for it. So this is in its very nature, and you can see the way Rishi described it and called it a bounce back loan. This is money that the government are trying to mobilize by guaranteeing, sitting as a backstop behind it, to get businesses taking risks and spending money, employing people, building new products, opening their doors again to get the economy moving.
Mm-hmm. And John, the same then to the self-employed, the grant there rather than the loan. Are people able to claim that grant if they're not actually being affected at all or massively by coronavirus now? What's the status of that?
So remember, unlike the bounce back loan scheme, which you can take advantage of a loan if you're not in crisis at the moment, the self-employed scheme, you have to make a self-declared statement that you've seen a reduction in profits due to COVID-19. Mm-hmm. And when we talked about this last week, I underlined that this is a self-assessed statement you're making. There is no assessment of that at the moment, but in the future it won't be too difficult for HMRC to look at your profits year on year, and if your profits were the same or going up, then perhaps there's a case where they might do a fuller audit or ask further questions about what you made this declaration that you were impacted by COVID-19, your profits went up, why was that? If you can't substantiate that, later on in the year things got better, then you could be in a spot of bother. We don't know what that looks like yet or how exactly they'll check it, but you are meant to be in a state of distress as such.
Whereas for the bounce back loans, that doesn't apply.
Exactly.
Okay, and just the last question we had, you've covered quite a lot of this earlier on this webinar, but the whole furlough status. So is there any limit to how many times people can take people on and off furlough and the kind of time limits for doing that? Ravi, if you want to.
Sure. So I think the minimum period, as far as I'm aware, the minimum period that your staff have to be on furlough is 3 weeks. And then when you take them off furlough, you have to take them off for a minimum of 3 weeks. That then doesn't stop you from then refurloughing them after that 3 week period.
And again, if you...
So again and again, and the only thing I would say is that as things change, what we start to see is there's going to be some possible changes in August. So the rules might change as that becomes clear, but currently we are able to keep refurloughing them and taking them off as long as you abide by that 3-week notice period.
Okay. And the last question we had, a sort of more broad question, are we expecting any updates in the coming week from the government or in the coming few weeks?
I mean, I think I said last week, because I always expect there to be nothing, and then Rishi comes up with something new and fantastic, like the bounce back loan scheme that solves a problem we've got at the time. Now, it does feel, anecdotally at least, that a lot of, in the SME space where we operate, a lot of problems have been solved. The bounce back loans were the final kind of icing on the cake there, and you can just see that the rapid and wide uptake of the bounce back loans is this was a necessary and needed tool to keep SMEs running. And with that out there now, and the furlough scheme, and clear plans how the furlough scheme is going to be unwound over a period of time, there's very few major things that could happen. I think the investment and landlord sector is still probably largely underserved, so there could be something coming out there. But at the moment, personally, I wouldn't expect anything big. And
for the director-owner businesses, John, anything there?
Director-owner businesses, we'd come back to this at most weeks as well. Remember, as a director, you're not self-employed, or sorry, as a director shareholder of a limited company, you're not self-employed. So, and you can't really get much money from furloughs. You normally have a small salary. So there's very little for you. But the bounce back loans seem to have solved that for most people. It gave them access to a chunk of money that would either see them through a down period, or just gave them confidence that they can continue doing what they're doing at the moment and deal with shocks, so they continue trading.
Okay, good. And we just had one question come in. Stephanie Goy is asking, can you apply for a bounce back loan more than once if you decide your initial amount isn't enough, but it's a set amount? Yeah.
I don't think so, Ravi.
Not that I'm aware of. This is a one-shot deal with the bounce back loans.
So people should be asking for as much as they are entitled to?
Yeah, so you've got to cap it, obviously 50,000, and the cap being 25% of your turnover. But within those limitations, we should be, the idea, what I've been advising is that we ask for as much as we can within those parameters.
And remember that once you've applied for your bounce back loan, you can't get a CBILS loan either. Right. So, and Ravi spoke about this last week, in that if you need less than 50 grand, then the answer is pretty simple. You just go for your bounce back loan, and it's straightforward. And if you were applying for, a 50 grand and under CBILS loan, you can actually have that refinanced into a bounce back loan. Okay. But if you need more than that, you need to make sure you understand that, because you can't apply for your bounce back loan and then get your CBILS loan. Okay. So maybe it's worth clarifying the statements Ravi were making earlier about everyone should have a bounce back loan. Yes, unless you're getting a CBILS loan. Okay, exactly. So if you need 100,000, 500,000, 5 million, to get your business through a particular period of time for this down period, so you're slightly more, you're not a micro business, you're a slightly more scaled SME, you need to avoid the bounce back loans and just be making application under CBILS.
Okay, great. Well, that's a really, really important point to finish on there. So we don't have any more questions coming in. So I'm just going to launch the poll now, which just asks for your feedback on the webinar, if you're interested in any additional Acuity services and in being registered for upcoming events. So I'll just do that. And as I mentioned earlier, the slides and the recording will be available and sent round to you by email. And I will hand back to John to finish off.
Great, thanks, Rosie. And also on Thursday, I'll be running a short webinar session on R&D tax credits, about what they are and whether you qualify, how you can qualify, and what our process is with helping you make applications for them. This could be for those of you that are either in sort of the technical, manufacturing, software type industries, or you're not a technical business, but you've undertaken a technical project, such as building a database, an application, or a sophisticated back end to your website, or in the construction industry, you've been doing something a bit out of norm about how things are built or designed, the construction techniques and things like this. There is a good chance that you can make a claim potentially of some scale. The average claim across the UK is around, I think, £50,000 across the SME R&D scheme, probably a bit less in the sort of SME world that we work in, but there certainly is a lot of essentially free money available from HMRC for businesses undertaking certain type of technical work. So if you think you might be interested in that, come along on Thursday and you'll be able to learn a bit more about how we can help. And that's about it from me. Thank you very much for joining us for another week, and we'll see you soon.